The Morgan Report with David Morgan.
David Morgan, themorganreport.com, week ending 6 March 2021. Well, I just want to say a few things at the beginning here. Obviously, most of you know that is the web domain, the main one anyhow. And of course, the members log in over here. But we do a lot for free, and the free stuff is right there. And I suggest all of you get on it. They're going to be doing some more interesting things pretty much in the silver space over the next couple of months, so you might want to consider getting on a free list. And you can bypass the free list, really, if you want. I just click the blog pull down on the first page I just showed you a moment ago. And if you get to the blog, you'll see most of what I do in the public domain on this page. And then what some people miss is this upper part right here, which I'm scribbling at. There's the YouTube channel, the Twitter feed, the LinkedIn. Facebook's really a landing page only. And of course, a site search feature here. So YouTube, I won't click it. You can. Twitter is something you might consider. Most of that I put up myself. It's generally to do with the economic macro picture and the precious metals. Occasionally, stuff I'm following or very interested in, like what's going on in the food supply, the agricultures, occasionally what's going on in the geopolitical scene, although I try to stay pretty much away from that. So if you're really interested in getting really update information almost daily, you could consider that. Again, that's free. I don't spend a lot of time on it. Don't expect a response from me. I seldom respond to Twitter feeds, although occasionally I will, but it does not absorb my day. Basically, it's a one-way street where I post what I think is germane to our current economic situation. So I'm going to go ahead and start off like I do most of the video updates or the weekly perspectives, and that is what's going on in the stock market. And the big news right now in the stock market is a very hectic week in the rise in bond yields, and this has gotten much commentary across the internet, and I won't comment further. I did a interview with Greg Hunter of USAWatchdog.com. I don't know if he's posted it yet or not, but if you're not familiar, Greg is well followed in the alt media. In fact, one of the top ones as far as I understand it, which is, again, his domain, USAWatchdog.com. He's been taken down off of YouTube, which I'm kind of surprised I haven't, but I've got an idea why not, regardless of what I think on that. Very hectic week for the bond market. Profit-taking and technology stocks on the NASDAQ pretty much got sold off. Stocks actually ended up okay on Friday, and one of the factors driving bond yields higher is expectations for higher inflation. Some say it is, some say it isn't. I mean, the truth of the matter is, if you use shadowstats.com, my friend John Williams, and look at the honest-to-God truth about the CPI, the way it was calculated back in 1980, it's irrefutable with food and energy that there is significant inflation. If you use the government's mandate, they can say with a straight face it's like 2% or less, which is, of course, not the truth. So we saw crude move up. I think that's the big thing. Very few people really understand the way the world really works. Not that I have a handle on it totally, but you hear the expression, money makes the world go round. And, it's finance. And all we get bombarded with is the stock prices and what's happening in the bond market and what the yields are doing and what the corporates are and, what's happening in the crypto world. But it all depends on energy. Without energy, nothing happens. And everything that depends on energy is everything, as I just mentioned, which means we're in a situation where transporting food, growing food, building a house, mining ore of any type is going to increase in price if the price of energy goes higher. And it is. So it will be moved into the system, meaning that, everything that you buy is probably going to cost more. Is that across the board? Pretty much on the aggregate, yes. In specifics, there are always exceptions to the rule and examples where it isn't as effective or doesn't affect it as much. So Be prepared. The energy has a lot more room to the upside as far as I'm concerned. It just broke down downtrend. West Texas Intermediate has broken a downtrend line on strength and good volume. A pretty much sure sign that it's on its way. Could it double peak around the 76 level, 77? The answer is yes. In fact, I expect it probably will. But that doesn't mean that's the end of it. I do expect much higher crude prices over the next 3 to 5 years. We will see. I'm going to be jumping around today a little bit, but this is Ronnie Steffele and others that put together the In Gold We Trust report. This is the 2021 version. It'll be published on May 27th. This is a preview chart book, so Ronnie and Incrementum, thank you for sending it to me. Historic monetary and fiscal stimulus sort of says it all. The Fed and the Treasury, hand to hand, smile to smile, eye to eye. Here we go. Anyway, I'm not going to read this to you. I'm just going to make you aware of it. If you're not on their mailing list, I highly recommend that you do. Chris Marchese, that used to work with me full-time, who's still doing work for us on a part-time basis, helped on the silver side last year. I don't know what the status is this year, but it's very interesting. This is a very debated topic, this velocity of money. And first of all, I can't argue with it. I mean, that's how much turnover there is in the money supply, or how many times a dollar or a yen or a euro turns over. It's very low. As I said in the USA Watchdog interview with Greg Hunter, you know, if everyone was given $1 million or $10 million and just stuck it under their mattress and did nothing with it, just looked at it in their bank account and saw those zeros, it really wouldn't have any effect on the economy. And actually, a lot of the QE that's gone into the system really has been pretty much sterilized. It's helped the bank's balance sheets. Nonetheless, that money is there and could come out at some time. I'm not going to get into the velocity of money argument. It's an interesting one, however. And Alistair McLeod did an excellent job of describing it in his latest article. Maybe I can pull that up and put in front in this video in a moment. So there's a lot to read this weekend if you care to. I try to pick out what I think are the top ones. This would definitely be one of the top in my view. I've known Alistair for a very long time. I've known James Turk for a very long time. But regardless, this money and statistical delusions, I am going to use this in the future. I can prove anything with statistics except the truth. Lord Canning, 1819. So you go through this whole article. Well done. In fact, in my view, one of his best. Some of the basics, and then talking about the velocity myth, which I just mentioned a moment ago. You can read his argument, which makes a lot of sense, especially if I adhere to be an Austrian, and I am mostly that, I would say. He, at the end, says, a famous economist, this is a irrefutable conclusion of Say's law, but was dismissed by the Keynesians in his general, or by Keynes in his general theory, to make way for his macroeconomic fallacy. So definitely worth not only a read. I mean, there's one, in my view, you can read something or you can study something. If you study something, you read it once or twice, you make notes, you highlight stuff, you look at words you don't understand, paragraphs you don't understand, you try to get in the context and really come out with a, let's say, an understanding that you could actually explain to somebody else with not many ums and ers in it. That's study, in my opinion. So this one's worth the study, I do believe. And I could go on in one of these videos, especially if I get to talk about silver. But I just want to go through a couple of ideas here with everyone. First of all, this is about a 2-year chart of silver. And you can see, you know, from this point in time 2 years ago, right there, to where we are now, which is right here. And silver basically went sideways for a while. As you can see, we got this huge drop down here to the $12 print in the paper market. Yes, some people bought it at that price, very few. Nonetheless, it printed that market, that 12. And then we've seen it really, really increase. And now it's kind of consolidating at a pretty high level. The point I want to make here is that it has dropped under the 50-day moving average on the daily chart. Okay, so now we're looking at the exact same chart, only we're looking at it on a weekly basis. So this is the weekly for the same 2-year period. So this is something I kind of wanted to bring to the community. Long term, precious metals go up, or have been over the last couple of decades, about 10% a year on average. But that means there were years where it underperformed and then overperformed. There's price risk in the metals, or any investment really, which means the price varies. But when you're understanding sound money, or my basic thesis, you really want to consider your savings or your stacking in terms of how many ounces or how much weight you have. If you have a larger stack of ounces a year from now, and the price is different than your average price, let's say, most people psychologically feel that they've made a mistake or they feel bad or whatever. But the point is, you really can't measure it that accurately in times like this where the currency destruction is taking place before our eyes. So anyway, hopefully that was somewhat clear. Here we are on a weekly chart. So you see the weekly chart, trend still basically up. And you see we haven't hit the 50 weekly or the 200 weekly, which I think is a more beneficial way for at least investors. I mean, not talking speculators or day traders, or I'm going to get into the SLV and get out, and, I've got all these options 2 months out and that type of thinking, which is fine. If you want to go that route, I am not going to criticize you. I'm just pointing out for those that are long-term conviction-oriented, looking at the big game, the macro picture, and where we are in a global fiat Ponzi scheme. We are still in an uptrend, and we're far, really, from where we need to be concerned technically. So here we are looking at exactly the same chart from a different perspective, and this time it is a monthly perspective. What's interesting is you can see the trend a little more clearly on the monthly, and you can see the volumes, which is interesting. We really had some good volumes in the summer months, which is highly unusual. I've followed the metals for many years, as most of you well know. And normally the summer, it's the summer doldrums. There's lots of reasons for that. I won't go into it, but you don't really see much volume in August or July or June. But yet you saw quite it's not average volume, let's say, in June, but July was slightly above average. August was it was the highest one in the last 2 years. It was August of 2020, which is interesting. March of last year was average, maybe slightly below average. March this year, we are only 1 week in, so we don't really know how this, March will actually be when the month is complete. But on the monthly chart, you can see that we're here, and the 50 on a monthly basis and 200 on a monthly basis is way down here. So I think this is a better perspective if you're brand new and you're looking, oh my goodness, it's under the 50-day moving average, and it's like, are those signals important? Yes. It depends what your parameters are as well, and that's what I'm trying to point out here. If your parameters are safety of capital, wealth preservation, sound money, barter even, then you want to take a perspective that is more than what's going on, a week from Friday. And I will own up to a couple things. One is when I called the top in 2011, I did move funds into fiat, which don't be upset by that. It's about the only place it could have gone at the time. And I probably remained too bullish too early. I thought at the time that maybe we had a 2-year reprieve to the downside. Silver held above 30 for quite some time. 26 was the exact number. It tested 26 several times, 3 times, and bounced off it to the upside. So technically that was a good indicator, but then the fourth time I could see it coming, and usually the fourth time on a commodity either coming from the top down or the bottom up. Usually it's 3 strikes and then the next one, bam, it happens. And so I was convinced that the probability was extremely high that after it breached the 26 level from the top going through it to the downside, we would see, we call it a bear market within an up in a major secular market. And that's exactly what happened. And it stayed there for quite some time. And a lot of people dropped off the party. Some continued to stack. Others gave up. Some got intrigued. Some watched it. I mean, a lot of different variables there. But the point being that we are in the last phase, I do believe, in several ways. We're in the last phase of a major secular market in the metals. Some say we're in a major last phase of a secular market in the commodity sector at large. Some say, and I'm one of them, that we are in the final phases of the fiat destruction or a currency collapse, which doesn't mean the dollar goes to absolute zero. What it does imply through monetary history is there will be a reset to a new system that will be the new way things are transacted. It's going to be most likely, from what we see in the news right now, the financial news, a central bank digital currency. Whether that will succeed or not remains to be determined. Always, when you get to the end of these currency collapses or these currency crises, there are alternatives that come up. Gold and silver are the most well known throughout history. You could go to the Weimar Republic and pull up a gold and silver chart, or what their stock market did, or any of those things. You look at Venezuela, you can look at Zimbabwe, you can look at any modern one or ancient one, and you get the same basic chart of what the paper price would be for gold and silver. This time, you've got the digital currency complex led pretty much by Bitcoin. So that is an alternative to the current system, as we well know. So we'll leave it there. I try to keep these around 15 minutes. Remember, there's nothing more powerful than the truth. If you're not on the free list, I suggest you do get on there. And I don't ask this often, but if you are on the YouTube channel or one of the others, Twitters, if you share that with your friends, build up the channel a little bit, I wouldn't mind it. I'm not like a huge advocate of, I got to have the most followers on any of these things, but nonetheless, it does help spread the word. And I have not monetized anything on YouTube forever, as far as I know. I applied for it. I never acted on it. But regardless of that, make a great weekend. Times are most interesting. And I guess I'll shout out a little bit to the silver-backed community and say thank you for waking up and waking others up. And I know I said my ending, but I had this thought and I forgot it until now. I wanted to give a bit of a tribute to the silverback, so I'm going to do that now. This is off of Wikipedia, as you can see. But what I like about the silverback idea is it's a gorilla. Strength is estimated about 10 times their body weight. Fully grown silverbacks are actually stronger than 20 adult humans combined. A silverback gorilla can lift 4,000 pounds on a bench press, while a well-trained man could get up to maybe 885 pounds, and that's a lot to bench. I've gotten to 300-something in my youth. Regardless, this is kind of an interesting metaphor to my way of thinking, so let me shout out to the silverbacks. It looks like you use that as a trademark, you might say. And you got the strength of conviction. I hope you do. I think you do. It certainly looks that way. I'll leave it there. I'll be back with you next week with a weekly perspective. This is David Morgan of themorganreport.com.